Well, US President Donald Trump unveiled sweeping reciprocal tariffs, announcing baseline 10% duties on all imports and much higher rates for some nations. In fact, Trump singled out major US partners for imposing trade barriers he deems unfair, with India and the European Union facing 26% and 20% tariffs respectively. Trump said, they do it to us and we do it to them. In fact, he announced a staggering 34% tariff on goods from China in his Liberation Day speech, railing against foreign cheaters and foreign scavengers. The US president said the US will charge an import duty of 26% on India and 34% on China. And speaking about India, Donald Trump described tariffs by New Delhi as very, very tough. He went on to say that their prime minister, as in Prime Minister Modi, just left the US. He's a great friend of mine, but he said to him that you're a great friend, but you've not been treating us right. In fact, to quote him, he said, India charges us 52%, so we will charge them half of that, which is 26%. But this announcement represents the largest upheaval in American trade policy in decades. US tariffs will approach levels not seen since the 1930s, as some experts argue. In fact, for further clarity on what's happening and how the world will react and the ripple effects, we'll go across to Daniel Block in just a moment, but listen in to what Donald Trump had to say.
Tariffs give our country protection against those that would do us economic harm, and many people were looking to do us economic harm. Maybe not so obviously, but they were doing tremendous economic harm. But even more importantly, they will give us growth. These tariffs are going to give us growth like you haven't seen before, and it'll be something very special.
And joining us live from New York at the moment, Daniel Block, who's a senior editor of Foreign Affairs and also a contributing editor at the Washington Monthly. Daniel, as always, thanks so much for making time for us. What a day it's been. But more tariffs equal more anxiety and uncertainty for American businesses and consumers. So would you call these tariffs a short-sighted plan?
I mean, with the caveat that I'm not a trained economist, I would. That seems to be the consensus among trained economists. And it also just seems to make a certain amount of logical sense. And for many reasons. One, to pick up on what you said, is uncertainty for American businesses and for global businesses. So for a while, one of the things that American presidents had tried to do, including Trump during his first term, is to get companies to leave China and to make their manufacturing lines, to move them to other countries, including India or Vietnam. And many countries did that, many companies did that. They started to move their supply lines over. And now suddenly those countries are getting hit by tariffs as well. So if you're a business, you don't have many good options. You're not quite sure what's going to happen next, where your supply chains are going to be safe. And in addition to that, there was no real sense of how major the tariffs were going to be until Trump announced them today. So companies are scrambling. They don't really know. They don't know what's going to happen next. The whole process has been quite opaque. So yeah, just tremendous uncertainty.
Right. In fact, Daniel, just hold on. We have another bite of Donald Trump lined up for our viewers. Listen in to what the US president had to say regarding these new policies.
I think you're going to remember today it's going to be a free nation that we're dealing with. We're going to have a very free and beautiful nation. It's going to be Liberation Day in America, and it's going to be a day that hopefully you're going to look back in years to come and you're going to say, you know, he was right. This has turned out to be one of the most important days in the history of our country.
Right, Daniel. So the reciprocal tariffs that Trump's levied, they will give the United States the highest tariff rates of any industrialized country, is what we're given to understand. And it's not even close to what the US president is saying, is what many experts warn. People say that now the US president is risking a recession. Is that what you're picking up on? What are experts saying on ground zero?
That's exactly what we're hearing. That the risk of a recession has gone up significantly. Right. And not just a recession, but the risk of inflation. There's a kind of nightmare scenario that these tariffs could push the United States into, of what's called stagflation, where the economy is stagnant or contracting. So you either have a recession or almost no growth. And at the same time, you have rising prices. And this is the last time this really happened in the United States was in the 1970s into the 1980s. And it's very difficult to get out of because the normal tools of monetary policy and stimuli that you would use become kind of, if not ineffective, they exacerbate one problem in order to solve the other. So, for example, the Federal Reserve, which is the United States' central bank, could hike interest rates if we have high levels of inflation. But if the economy is contracting, if jobs are going away, if we're having a recession, that will add fuel to that fire.
Indeed. In fact, some say for Trump, tariffs are not so much a negotiating tactic as a policy, a new revenue stream, and a made in the USA commitment. But what are people on ground zero saying? What have the initial reactions been from the opponents?
I mean, Democrats have been very critical. They argue kind of what economists have been saying, that this will produce inflation, it will slow economic growth. And I think just generally a sense that if your goal is to get more revenue for the United States government, this is not the right way to do it. The main thing that tariffs do in order to generate more revenue is they effectively act as a sales tax on Americans, because companies that are paying those tariffs will pass on the increased costs to American consumers in the form of higher prices. And sales taxes tend to be quite regressive as far as taxes go, because if you're a wealthy person, you can afford to pay more. But if you're a poor person, you can't.
Right. In fact, one cannot also ignore those who argue that things may not look so benign, however, when the rubber hits the road, because it's inevitable that enthusiasm will be dulled either among the public or in markets when the inevitable price hikes are passed on to consumers, and when inflation, as you've highlighted, and the cost of mortgages begin to rise, when real wages will remain flat, or even when the investment stalls, the US economy starts to experience a Trump slump. Would you then say, Daniel, that these tariffs are quite the opposite to the new paradigm of political economy that the Democrat capitalist world so obviously and urgently needs?
I mean, it may be. This is an interesting moment for the Democratic Party in the United States, where the Democrats performed well in a series of special elections yesterday. And now these tariffs are giving them kind of a new opening. And so there's a bit of new economic life, a bit of new political life in the opposition in the United States. That's for sure.
Right. In fact, Daniel, do stay on with us. We've got Maha Siddiqui joining us live from Vancouver at the moment as well. Maha, thank you so much as always for making time for us. Countries like Canada, where you are, Brazil and South Korea already are voicing strong opposition to Trump's announcement. In fact, US allies like Canada and Mexico and the EU are among the most vocal critics of Trump's sweeping policies so far. Mark Carney's told reporters that Canada will fight Trump's tariffs with countermeasures.
Yes, he said that Canada will react with purpose and with force. And there's already been a meeting after the announcement by Donald Trump at 4 p.m. Eastern time in Canada that Mark Carney held. One meeting was held even before the announcement by US President Donald Trump, but the exact countermeasures by Canada have not been announced so far. The countermeasures that were put in place earlier, which was with regards to $30 billion worth of goods, that remains in place. That was the first tranche of the reciprocal tariffs that Canada had imposed. But right now, because that board that you're showing, which President Donald Trump had shown today, listing out the names of the countries and the reciprocal tariffs that the US will impose, did not have the names of Canada and Mexico. So at the moment, there is some amount of uncertainty as to how much that reciprocal tariff will be. We know that a baseline reciprocal tariff of 10% has been announced for all goods that are brought into the US. So overall, at the moment, what Canada is dealing with is a 25% tariff on aluminum and steel and a 25% tariff on the automobile industry, which is fully made cars as well as auto parts. And that really is the big hit for Canada. And it is a very politically sensitive issue as well. The province of Ontario, clearly where a lot of auto manufacturing is located, is one where we are seeing a lot of action with elections due in Canada on 28th of April. We are seeing leaders go there, talk to these automakers, the sectors, the workers who will be impacted by this. Canada is really bracing up for an impact on the auto sector, and it's not just an easy impact. And it's not an impact that we're only going to see on Canada. As the previous speaker there was pointing out, the impact will be felt by consumers in the US as well. And also we must point out that many of these sectors have a very complex supply chain, which means that while one part is being made in one part of North America, another part of the same car can be made in another part. So we are seeing a very complex supply chain running between Canada, Mexico, and the US because of the agreement, the free trade agreement between Canada, US, and Mexico, CUSMA as it's called in Canada. We had seen some sort of seamlessness in the manner in which trade was conducted, which is all at the moment being appended here. And we are likely to see that 10% baseline tariff that I was pointing out on products that are and goods that are not compliant with CUSMA. So we will have to wait to see what the full impact really looks like, what the assessments are. But at the moment, the auto industry seems to be taking the biggest hit as far as Canada is concerned, which is a matter of severe concern here. And the Canadian government had already said that the $30 billion worth of goods that are already being impacted by the reciprocal tariffs. Apart from that, they already have in place a plan for a $125 billion further goods that they could levy tariffs on. But that announcement is yet to come.
Right, Maha, do stay on with us. I must also inform our viewers that Trump's discounted tariffs have ruffled feathers worldwide as nations brace for the economic storm. In fact, from Australia, the Prime Minister has warned it's the American people who will foot the bill for these unjust tariffs, and they will not play this dangerous game. In Spain, Prime Minister Pedro Sanchez stands firm, saying that they will protect their workers and remain committed to an open world. Meanwhile, the Swedish Prime Minister has called for cooperation, declaring, "We don't want to fuel a trade war. We want to find a better way forward." Let me also tell you what Switzerland is saying at the moment. The president has promised swift action, emphasizing the nation's commitment to international law and free trade. And Ireland's Prime Minister has decried the move, stating that tariffs benefit no one, especially not Irish workers. And over in Colombia, Foreign Minister Laura Sarabia has added, "We are evaluating how to protect our industries and exporters." But as the world holds its breath, one thing's for sure, this trade war is far from over. But just listen into the reactions we've lined up for you. Right, while we line up those global reactions for you, I must inform you that items from about 60 trade partners that the White House described as the worst offenders, including the European Union and China, face higher rates. Payback for what Trump said unfair trade policies were. Daniel's still with us at the moment. Let's bring Daniel in. Daniel, analysts have warned that this trade war escalation was likely to lead to higher prices for Americans, as you and Maha have highlighted, and also slower growth in the US, right? While some countries around the world could be plunged into recession?
It's absolutely a risk for both economic growth in the United States and economic growth in other countries. I mean, what you're doing to some extent, or I should say what Trump is doing, is trying to slow commerce down, commerce between different countries. Now, Trump hopes that that will eventually lead to a reshoring of jobs and industry in the United States, but there's no guarantee that will happen. And if it does happen, it will take a very, very long time for companies to move their supply chains back to the United States. And in the meantime, I mean, other countries will find themselves selling less goods to the United States because it will be a lot more expensive. Americans will be purchasing fewer foreign-made products. At least that's what economists expect, because they'll cost more. The United States is an enormous market. It buys a ton of things from around the world. That's why it has a large trade deficit with so many countries. So yeah, the negative effects will be felt everywhere.
In fact, Maha, will the reciprocal tariff approach, as many experts are warning, lead to a more insular US economy? What could that mean for countries like India that rely heavily on international trade? What are the experts in Canada saying?
Well, as far as India and the United States is concerned, we have seen even during the previous tenure of President Donald Trump that he went after India, saying that it was one of the worst exploiters of tariff, and that the tariffs in India were very high. And last time specifically, if you remember, the focus on Harley Davidson was a constant one from President Donald Trump, and had led to a certain amount of discomfort between the two countries as well, because that was a constant refrain coming in from Donald Trump. This time we are seeing again, as you saw on that chart, where it was pointed out that the tariffs from India are almost 52%. That was the assessment that has been made by the US. And therefore, the reciprocal tariffs that they are saying imposed on India now will be about 26%. As Daniel is pointing out there quite correctly, that of course the fallout will be on consumers in the US, because anything that is exported to the US, that US imports within its own country, the importers are going to have to pay a higher price for that product, and therefore that product automatically will become more expensive for the US consumers. But this will have a destabilizing effect on those countries that are very big trade partners of the US. For instance, if I bring you back and circle you back to Canada, this could have a debilitating effect on the Canadian GDP. And Canadian economy has already been suffering lately, and we have seen the impacts on the consumers here as well, considering the inflation has been quite high, prices of daily amenities, goods has been high, there's been a housing crisis, and all these kind of tariffs, this kind of jolt that we will see to the economy could lead to long-term impacts as well in Canada. Some of the infrastructure projects could become more expensive for the Canadian side as well. So long-term projects become expensive. There could be, you will have to go to your drawing table again and redraw the budgets for them. Social development rates get impacted, weighted average cost of capital gets impacted. There are so many ramifications of this kind of tariff, which is all encompassing now. It's such an exhaustive and expansive list. And as I pointed out, because of the complex supply chains now spreading across the world, and we have seen a glimpse of that during the COVID-19 pandemic, how the supply chains came into shock because they are so complex now, spread across the globe, and any such shock to that supply chain, even by way of a tariff, can have a debilitating effect on world trade. And at the moment, even if you want to appeal this kind of tariff at the World Trade Organization, for instance, it will go into a void. That's because the World Trade Organization's appellate body has not been functioning for the past 7 years because of lack of quorum, and that too because the US has been upset with the appellate body and has not approved the appointment of judges. And that means that any appeal to the World Trade Organization will run into a void. There is an alternative mechanism for redressal that the European Union and some other countries, about 60 odd countries, have come up with that. But there are many countries that are not part of that setup. For instance, of course, the US is not there, and even India is not part of that body. So what happens now? How do these problems around world trade get negotiated, or how do you address these problems now? That, again, is a big issue at the moment.
Maha, as always, thank you so much for contextualizing the latest information for us. Daniel Blocks, thanks so much for joining us on NDTV as always. Let me just tell our viewers that Trump has dismissed concerns about how his tariffs will affect the US economy, but the move is likely to prove a political test for his administration, which was elected in part on promises to tame prices. Meanwhile, Wall Street's months-long headache over Donald Trump's plans for a global trade war is threatening to turn into a migraine as we speak. Trump's executive order subjecting imports to a 10% tariff and applying even higher levies to products from 60 other countries deemed bad actors triggered a broad sell-off in stock futures and a drop in oil prices as well. It was a sign, as people are saying, that investors are wary of how surging import costs could become a serious drag on the world economy. And some say for Trump, tariffs are not so much a negotiating tactic as a policy, a new revenue stream, and a made in the USA commitment. We'll keep tracking the latest developments for you. My colleague Sakshi Bajaj joins you on the other side in a few moments. Do stay tuned.
As US President Donald Trump signs the executive order on global reciprocal tariffs, we have seen global markets plunge. We've seen Dow futures tumble 1,000 points, S&P 500 futures slide over 3.5%, as well as Nasdaq futures decline over 4%. Asian markets have also tumbled sharply, with Japan's Nikkei declining over 4% and South Korean shares declining over 2% in early trade. Meanwhile, gold prices hit a record high and are clearly thriving on safe haven demand. I am joined by Ajay Bagga, senior market expert, to of course make sense of the markets and the economy, oil prices as well as gold prices. Ajay Bagga, markets plunging on expected lines and Trump clearly going ahead with his plan.
Yeah, it's worse than the worst case scenario that has happened. We were expecting a universal reciprocal tariff around 20%. So that has come at 10%. But the country level tariffs are a big shock, especially on China, a 54% all consolidated tariff. On Vietnam, a 46% tariff. On entire Europe, 20%. India, 26%. Most of Southeast Asia getting a tariff. 60 countries getting tariffed. And even small countries like Laos, Cambodia getting 30% plus. Norfolk Island, which is an island, which is a territory of Australia with a population of 2,000, gets a tariff of 29%. There is no comparison between a small enclave of 2,000 people and the US economy. So this is not a well thought out position. And unfortunately, to run global affairs like this, that I have made my move, now you come on the poker table and you lay down your cards, let's negotiate. That's not the way to run international relations. Secondly, that's not the best thing for the global economy. Markets are just reflecting the pain in the global economy caused by this once in 100 years kind of a tariff war that has got unleashed last night.
Right, like you said, this is of course reflecting the fact that there is more room for negotiation going forward. But what about the sectoral impact as far as India is concerned? Many were expecting announcements for pharma. Now that hasn't happened. So will this be a boost for the pharma sector in India?
No, not at all. If you see the White House declaration, they have said copper, pharma, semiconductors are going to come under sector-specific tariffs. So they have been kept out of the country-specific tariffs. Sakshi, you must remember, Ireland, with a population of 5 million, is exporting $100 billion of pharma products to the US. That is the biggest thing rankling Trump, that why have American pharma majors headquartered in Ireland and they have set up factories there. He wants them to come back home. So you are going to see 25% tariffs on pharma as well. So Indian pharma, there is no escape. Either you get the country 26% or you get this 25%. But pharma tariff is definitely coming. So no way out. In terms of sectors, today metals are falling across the Asian region. Oil is down. Only thing up is gold. Only thing up is yen. And Japanese government bonds are seeing buying. The yields are going down. Those are the safe haven buying that is happening. US treasuries are down quite sharply. The yields on US treasuries. So people are rushing into US treasuries. Asian currencies are down. China has to still fix its currency. They had drawn a line, Sakshi, of 7.2 yuan to the dollar. They were protecting that. Today, in the offshore market, it has crossed 7.3. The risk is that Chinese allow their currency to depreciate, as they did in 2000 and 2019, 2018 and 2019, which led to a global stock market sell-off, because all the emerging markets then, to stay competitive export-wise, also follow suit and depreciate currencies. So you could be seeing a currency war starting. We have to wait and watch. But overall, I think there'll be a massive sell-off. Japan opened 4% down, then we have seen some amount of stability there. If you look at Chinese ETF, the internet ETF, which is the biggest one, $8 billion China internet ETF, that's down 6% this morning. Vietnam country ETF, the biggest one, is down 10%. Those are offshore funds who are just taking their money out, but that will translate into selling in those markets as those markets open very shortly.
Absolutely. So no respite sectorally, as well as global currencies being impacted. But between India and US tariff differentials have been significant as far as agriculture, auto and the jewelry sector have been concerned. So your thoughts on the impact now given for these sectors at large?
Yeah, it is a drag on the profitability of all these companies, and a minimum 10% has been set. So the baseline is you cannot escape below 10%. So the best deal we can look for is 26% going to 10. Now, if you look at this 52% that they have allegedly said that India levies, that includes GST, that includes non-tariff barriers and what they call currency manipulation. Now, all those are subjective things. GST is our own internal matter, which we levy on classes of goods. We don't levy on origin of goods. To add in a GST of 18 to 28%, and calculate tariffs that India levies, India is actually levying 12 to 13% on a weighted average basis on US goods, and US is levying 2.5%. So we were expecting at most a 5 to 10% country level, or a worst case scenario was 20% universal tariffs. What has come instead is 26% country level tariffs for India. One good thing is it's much better than Vietnam, which sits at 46, or China at 54, or even Bangladesh at 37%, Sakshi. So, but this is just the negotiation Act 1. You have to go to Act 5 of this drama, which is painful. And as investors, we have to unnecessarily go through this pain. That is what is spoiling the mood globally this morning.
Right, investor reaction and of course negotiation being the key word from you, but we are also joined by Badri Narayanan, Gopalakrishnan, senior economist, to make sense of what is happening. Badri Narayanan, you know, a lot of people have been talking about India needs to boost export market diversification. Now, given the tariff spree, your thoughts on whether India should go ahead with this as sooner than expected?
Thank you for having me here. I agree with Mr. Ajay Baga that this is a very sad and kind of shocking news for us this morning. In terms of our exposure to US, it's definitely substantial. It's one of our major export markets. And this kind of tariffs are going to be difficult for us. Like he said, we do have, we are still better than China, Vietnam, and other countries. But at the same time, compared to the countries with whom US already has free trade agreements, and many other countries for whom the tariffs have been 10% or definitely lower than ours, we are going to be at a disadvantage. So yes, in terms of diversification, it is a good idea to look at multiple markets to diversify, and our industries are already doing that. The US has in the past few years become quite a cost-sensitive market. So many of our exporters are actually looking at EU and Middle East and other regions for exports. But still, I'm only talking in marginal terms. In the majority, a large chunk of our exports are still going to the US. So it's a very important market. Whatever diversification we do, we still are going to have US as an important partner. And that is where you talked about negotiation. That is where our negotiation strategy right now, where we are, our entire colleagues in the Ministry of Commerce, Department of Commerce, they are working on this negotiation with the Trump administration on an FTA that is being negotiated. I think, like Ajay mentioned, it's like even the Treasury Secretary Scott Bessent mentioned a few months ago about the strategy of escalation to de-escalate. So escalate the tariffs and then bring partners to negotiate and then reduce the tariffs. So that is a strategy.
Right.
And
thank you
maybe
so much for sharing your thoughts, both of you. And of course, 2 new strategies and negotiations going forward.
Meanwhile, in news just coming in, Prime Minister Modi has an action-packed schedule for this week. He is going to be in Thailand for the BIMSTEC summit. He is just departing for Bangkok. In fact, during this trip, he will hold talks with his Thai counterpart, Paetongtarn Shinawatra, and attend the 6th BIMSTEC summit. Prime Minister Modi is scheduled to meet Shinawatra at the Government House, where he will be accorded a ceremonial welcome, is what his team has informed us. And this evening, our Prime Minister will join the BIMSTEC leaders from Thailand, Bangladesh, Sri Lanka, Nepal, Myanmar and Bhutan to oversee the signing of the Agreement on Maritime Cooperation. This BIMSTEC summit, you must note, will bring Prime Minister Modi face-to-face with Nepal's Prime Minister KP Sharma Oli, Bangladesh Chief Advisor Mohammad Yunus and Myanmar's military junta leader Min Aung Hlaing, among others. Now on Friday, which is tomorrow, Prime Minister Modi will call on the Thai King as well. Meanwhile, Prime Minister Modi and Shinawatra are scheduled to visit one of the top 6 temples in Thailand that is famous for its massive reclining Buddha statue. This is part of his scheduled tour. The Prime Minister will attend the summit on Friday morning, where the regional grouping is expected to also adopt the Bangkok Vision 2030. We'll, of course, be tracking everything that's happening at this BIMSTEC summit very closely. For now, we're stepping into a very short break. Back in a moment. Don't go anywhere. Welcome back. Well, Donald Trump has probably not read much Foucault, but he appears to embody the French philosopher's claim, as some analysts argue, that politics is the continuation of war by other means. Nowhere is this more apparent than in his fondness for tariffs. He presents taxing foreign imports as a way to rebuild the American economy, as you've seen with his latest announcements, in favor of blue-collar workers left behind by free trade and globalization, as you've seen from his remarks on the matter as well. Yet, some argue that it seems he plainly thinks that politics is not about truth or justice. It's about leverage and supremacy. But Donald Trump has listed the high tariffs charged by India on American products as he announced reciprocal tariffs on countries across the board, declaring a 26% discounted reciprocal tariff on India, as I have mentioned. The US president said the United States charges other countries only a 2.4% tariff on motorcycles. Meanwhile, Thailand and others are charging much higher rates, like 60%. India charges 70%, Vietnam charges 75%, and others charge even higher rates. But as he announced these tariffs, he held up a chart that showed the tariffs that countries such as India, China, the United Kingdom, and the European Union charge, along with the reciprocal tariffs that these countries will now have to pay. In fact, we're going to pull those visuals up of you, of Donald Trump holding those tariff charts up. That chart indicated that India charged 56% tariffs. In fact, my team will just pull those visuals up for you. The chart that he was holding up indicated that India charged 56% tariffs, including currency manipulation and trade barriers, and America would now charge India a discounted reciprocal tariff of 26%. Well, for further clarity on the India impact, we have with us at the moment Asif Iqbal, President, Indian Economic Economic Trade Organization, and also the former consul government of the Republic of Suriname. Thank you so much, sir, for joining us as always. India has been a significant beneficiary of trade with the US. It's no secret. So how might the new tariffs disrupt this trade balance? And what long-term consequences could this have on Indian businesses, sir?
Thank you. Probably now I feel that our tariffs that we have got is not as much as compared to what you look at China, because our total trade is 124 billion. And, our exports have reached around 81 billion. Whereas the imports are only 44 billion. So we are in a safe side, which is a trade surplus of around almost 37 billion. But, it is not as bad as we think, because it is not a generalized tariff effect on India. It's only sector specific, especially for the automotive and IT. These are the two sectors that can mainly be affected. But apart from that, in general, it is not as much as, if you compare to other countries that he has imposed upon. And, if you look at it, our security concerns, they are not going to be as big as they seem to be. So I think we are in a very safe area this time.
But sir, Trump's comments that India has been tough on tariffs raised questions about the future of Indo-US relations as well. So would you argue that this tariff increase could escalate tensions between our two nations, or will it prompt more collaboration on trade reforms?
No, you see, Mr. Trump has very clearly said that, the Prime Minister is a great friend of his. So he's trying to make it look very personal and trying to keep it very balanced in a way that, the tariffs are there. The Prime Minister is a great friend of his, but at the same time, he has to impose this tariff. So that itself gives us a kind of balance, because he has not said this to any other country. He has not said this to China, Korea, or any other country, or Germany, but he has said this specifically with India. So it looks like a very soft approach. That he wants to keep it balanced and keep India also in line with all other countries, but at the same time giving that very soft touch that he has given it for India. And he's already clearly mentioned the Prime Minister is a great friend of mine, which clearly says India is a great friend of US, and these tariffs are just temporary.
Keeping that in mind, what role do you think India's diplomatic ties or diplomatic channels will then play with the US in negotiating to reduce these tariffs? Is there space for compromise? Or would you say this is a major setback currently for India's trade policy?
The Ministry of Commerce in India, they have been evaluating several possibilities based on these, tariff disparities and specific types, of various countries.
In fact, what I feel back and forth from the US as well.
Yes, and we've also been in discussions with local industries to address these non-tariff barriers that can that can affect their exports to the US. And India has also expressed our willingness, to order more tariff cuts on more than half of US imports worth almost 23 billion. And that will be a very big concession in years. And I think we look forward to a very positive, kind of approach to this particular tariff announcement.
Mr. Iqbal, before I let you go, what specific steps should India then take to mitigate the adverse effects as we speak of these tariffs on its economy? Should we look for alternative markets or diversify our export portfolio?
Well, we already have, some response coming from the neighboring country like China, saying that India, they are ready to buy more and more goods from us. That's a very kind of a collateral benefit that we have, that many neighboring countries and many other countries nearby will start, building and deepening their relations with us, which is good for the Indian, economy and the Indian exporters.
Right, well, we'll wait and watch how this entire impact unfolds. As you know, Donald Trump has said that Narendra Modi is a friend, but has also criticized the very high tariffs that India has imposed as far as US goods are concerned. Mr. Iqbal, thank you so much for joining us on NDTV.
Thank you.
The US president has announced a baseline 10% tariff on US imports, with steeper reciprocal levies on goods from a slew of other nations, including us in India, Europe, Japan, and China. And you know why it's a big deal? Because Trump's announcement ends the free trade era that has defined global commerce for decades. A move that now risks higher consumer prices and economic damage as well. But in terms of the numbers, the reciprocal tariffs hit dozens of nations, including some of US's largest trading partners. Donald Trump listed the high tariffs charged by India on American products as he announced reciprocal tariffs on countries across the board, for us declaring a 26% discounted reciprocal tariff. Imports, meanwhile, from the European Union, Japan and South Korea will be subject to tariffs of about 20% or higher. Imports from Vietnam are subject to a tariff rate of 46%, while Taiwanese imports will face 32% tariffs. Now, you need to keep a keen eye on the fact that It is President Trump's gamble to revive domestic manufacturing, raise revenues to offset tax cut costs, and also push other nations to adhere to non-trade related demands. Trump's reciprocal tariffs decision promises to ruffle feathers worldwide, as we've already seen with the initial responses as nations are bracing for this economic storm. But for further clarity on the matter, I now have the pleasure of being joined by Andrew Leung, who's an international and independent China strategist based in Hong Kong, also joining us on the broadcast at the moment, founder and CEO of US India Corridor, Angela Jadkar, live from New York. Thank you so much for making time for us and joining us on NDTV. Andrew, to you first. China, one of the United States' largest trading partners, is going to be hit with a new 54% tariff, India with 26% among many others. Would you say we're in the middle of a global trade war now, as many experts have highlighted?
Clearly, this is a completely overturning a new page in trading relationship of the United States with the rest of the world. It's not just targeting a number of large countries or traders like China, but also Americans' allies and friends. It is so-called reciprocal tariffs based on, for example, existing tariffs in a number of countries, even though they are not the largest trading partner of the United States, even though they're friends, which of course could include India, but also it's across the board. Now, Trump believes that tariffs could bring back prosperity to the United States, but this is his rhetoric. And then he thinks that tariffs could bring jobs back to the United States without realizing that, of course, the costs of production of a lot of these products in the United States are no longer competitive. And that's why these productions have been outsourced to other more competitive countries. Now, that's Adam Smith's comparative advantage. But it's going to completely disregard that. And of course, the degree of tariffs is calibrated in relation to what extent that country accounts for imports into the United States. Now, the biggest country imports is, of course, China, Canada, Mexico. But, for example, India, of course, in terms of the relative import is less, and hence the tariffs are relatively less severe compared with other countries. But even a close ally now, Vietnam, as it's pointed out, is a huge tariffs. So I think this is upends the whole world's trading relationship, upends the whole world's supply and value chain, causes inflation around the world because of all the higher costs, and of course resulting in huge costs to American consumers. And then various traders, including Goldman Sachs, have already predicted a high likelihood of an American stagflation, if not immediate recession. And then these tariffs hark back to the time of the so-called Smooth Act, the tariffs back in the 1930s, which deepened the American recession. So that's highly worrying, but at least Trump believes that the immediate term would result in additional revenue to the United States, would bring back certain jobs to the United States, and would create a golden age of the United States economy dictated by oligarchs and entrepreneurs.
In fact, Angela is also with us now, Andrew. Angela, what role do you think India's diplomatic ties with the US will play in negotiating to reduce these tariffs? As we speak, you think there's any space for compromise? Or is this a major setback for India's trade policy, as many experts are arguing?
Okay, good morning to you. Good morning, India. So I actually think that, the conversations just are ongoing. I think that if you saw how the U.S. markets had responded, they didn't respond well as President Trump was speaking.
Yes.
Because the the tariffs were much higher than expected that were imposed. Now, the markets do not like uncertainty. Markets want clarity. And from what I understand, there was very little clarity that was provided. So it puts companies, multinationals, in a very difficult position.
Absolutely.
And just responding very quickly to what you were saying, yes, I think, this is the art of the deal. And Trump will be Trump, and he will continue to negotiate. But what he understands, and CEOs understand, that you have to be really sensitive in the words that you choose and how you and be very measured when you're communicating, because the markets are very sensitive. So I think he is just going to continue to negotiate. I think this is shock treatment. I think there's going to be a lot of negotiating that's going to happen behind closed doors. If you noticed, Canada and Mexico, that's been in the news for months, have not been mentioned today.
In fact,
and so, yes, go ahead.
Leaders from Europe to Latin America actually criticizing the tariffs as economically damaging as we speak. Andrew, just want to bring you in for a quick moment here. You think these tariffs will force countries to reevaluate their dependency on the US market, leading to a potential reorganization of global trade alliances and partnerships?
Well, naturally, a number of many countries are already recalibrating their trading and, if you like, even geopolitical relationship with the United States. Not that they would just change cam entirely, but then the people are starting to hedge, and even long-time allies like European countries and Canada and even a closest neighbor like Mexico are already recalibrating their response. On the one hand, like Canada and Mexico, are trying to impose retaliatory measures as a negotiation tactic, if you like, because if you just take everything lying down, and then your national interest could be compromised. Right. Likewise, other countries. So I think that we are seeing the trade shifting to perhaps the global south, and then the realignment of trading relationships even between India and China, between Europe and China. Not that they are going to embrace the panda, but on the other hand, they're going to hedge, they're going to seek out areas of a possible cooperation and possible partnerships.
Well, as we wrap, Angela, so you think these decisions will isolate the US economically?
So what I actually think is I just want to focus for a second on the business community because it's very much part of the discussion. So multinationals, companies, publicly traded companies, are having difficulty in business planning. And, we're also thinking about, when they're making decisions, it's not like they're making decisions on their own. They're part of a bigger ecosystem of stakeholders. Take, for example, the auto sector and the exposure that the auto sector has to, in markets like Canada and Mexico. And so now, if we're thinking now about reshoring, nearshoring, friendshoring, that, takes time. But if you think about the US-India relationship, I think naturally multinationals that already have a presence in India and markets like India will continue to expand in India and also rethink their US strategy, which would also include the reskilling of American workforce in the United States.
All right.
It also, take time to recreate these new supply chains and also de-risk. Companies are planning on, thinking about de-risking.
All right.
Away from the US. And also diversifying their talent pool. Vietnam was on the list.
Well, many don't have an optimistic view at this moment, though. We are still awaiting for clarity on how this will play out. But Angela and Andrew, I'm afraid I'm completely out of time on this bulletin.
Yes.
Thank you so much for making time for us and joining us on NDTV. Really appreciate it. News and updates continue in a moment. Do stay tuned.